What's up, everybody? How you guys all doing tonight? What's up, everyone? Oh, it feels good to be back, guys. It feels good to be back. Can everybody hear me okay? Everybody can hear me? I'm back. I'm back. I'm back. What's up, guys? I'm feeling much better. Thank you. Guys, I'm feeling much better. Thank you. Honestly, all of you. I've had so many of you were sending me messages. I got a bunch of emails. I got text messages. I got Twitter messages. Everybody just wishing me, some well wishes and to get better. And I do feel my voice is still a little scratchy, but last week I got sick. I had a fever. My throat was killing me, and I was like, oh shit, Rona, you know. But turns out it was not coronavirus. It was strep throat. And I am susceptible to strep. I get it like almost every year. But it was kind of a relief to know that it was strep and not. I've never been more relieved to have strep throat, I got to tell you. So I have my tea, pomegranate peach white tea or something with honey and lemon. So I do feel much better. Thank you, all of you guys. Thank you, all of you. I am so excited to get my ass back tomorrow. I took a couple days off of trading just to kind of get my health back together. And now that I am back, I'm feeling better. Day by day, I'm feeling better. Day by day, my voice and my throat is getting better. But I am I'm so excited to get back, guys. I can't tell you how much it sucks to not be in chat with my TGD family. I miss you guys. Who do we have here tonight? Sean, Miss Tiny, Paul, OG Khan, Alex, Soldier, Savannah, Kenneth, Javier, Sarah, Andrew Knutson, Joshua Greer, my man, JD Seafood, what's up? Yvonne says, I love the voice. I'll keep it like this. Oh, what's up, guys? Gary Marshall, thank you, man. Thank you. Nautical, Jeffrey, Mark NJ, Travis, JS, oh, we got the crew is with us tonight. R. Hirsch, my man, what's up? Big Bala, Mike Duraco, Erickson, David, Maria, Mr. D, what's up? Mr. D, what is up? Mary John. How long will I be on tonight? I don't know, Mary. It depends. There's a lot of things I want to get into tonight. A lot of things I want to talk about. Since I'm kind of back here, I missed a couple days of trading, so I want to just kind of get caught up with you guys on some things that I've noticed over the last couple of days. I want to talk to you about the outlook that I expect going into this week and where I plan on making some money this week. And then I also want to share with you guys. I feel like it's really, really important for me to go over a couple lessons with you on how to find your own stock picks, because while I was out, a lot of people. I was getting messages from a lot of people like, Mike, what are you watching? I'm like, hey, guys, I really wasn't trading, and I want to make sure that all of you are able to identify the best stocks to be trading throughout the course of the day, even if you are completely by yourself. Now, the rest of the TeachD moderators did an outstanding job. I just got to give a huge shout out to Jason Simmons, Alex Campbell, Jay Downing, Chris Toner, The Wolf. I mean, you guys just crushed it while I was missing and missing from action. And that's what TTG is all about. It's the strength of the team, guys. It's the strength of the team. It's like, even though I'm not there trading, we still have such a solid foundation of traders, both moderators and members alike, to kind of go through and walk through the trading day. I know a lot of you caught IGC. I have IGC up on my screen. IGC was a huge runner from $1 all the way to 450. Okay, and a lot of people caught IGC. A lot of people caught NTN was another huge runner. Okay, NTN from $3 all the way to 8. A lot of people caught Tesla off that news of the forward split. Tesla we went from like 1450 all the way to 1650, a $200 move in Tesla. So I'm really, really, really happy and proud of the whole team, the way that you guys performed over the last couple of days without me there. And I just feel like, it's important. I always teach in True Trading Group. One of the things that I really focus on a lot is the educational aspect, to a point where I want you guys to be able to identify setups on your own. One of the things that we talk about here on this channel and on live streams, and that I cover in all of the courses and the curriculum, and one of the things you learn as part of the TGD family, is how to identify A+ setups versus a B or a C setup. But even before that, we have to talk about building your watch list and developing a game plan for the stocks that are on that watch list. And that's such an important aspect of trading. And I felt like, what a perfect time for me to come on and talk about this lesson with you. So on this live stream tonight, we're going to be discussing how to build your watch list, how to develop a game plan for the stocks that are on your watch list, and then how to identify an A+ setup versus a B or a C setup. And that's going to help you guys. Getting this aspect of trading down is going to help you be able to better pick your own stocks to trade, or better yet, know what stocks deserve your attention and where you can stay focused in the day. Because a lot of traders, especially inexperienced traders, they get very distracted in the morning. They get very overwhelmed. There's a lot of stocks that are moving around. You have a lot of people on social media in a chat room that are talking about different stocks. A lot of stocks are moving around very quickly because that first half hour of the day is typically one of the most volatile times of the trading day, where you have stocks that can whip back and forth very violently and very quickly. And a lot of inexperienced traders tend to get caught up in that volatility, and they get very distracted and they get very overwhelmed. So I feel like this was such a great time for me to come out and talk to you guys about that. And that's what we're going to focus on this live stream here tonight. I'm so excited to get back. Not even to get back in chat, but I'm excited to, I haven't been on YouTube lately. I haven't been making any videos. I literally couldn't talk. My voice sounded like I literally could not talk for the last couple of days. So no live streams for me, no videos. I missed you guys. I hope you guys missed me as well, but I'm ready to get back down to business here tonight. So I hope you guys are excited to go over a lot of this information that I'm ready to cover with you here today. So to start things off, we're going to start off the live streams same way we do each and every single time. I'm going to take about 15 minutes worth of questions. Okay. I will let you guys just fire away, ask me some questions. Could be about anything, could be trading related, could be about individual stocks, could be about myself, my career, could be about whatever you guys want. But fire away, ask me some questions. I'm going to give just a few minutes for some people to log on and join us on the stream before I get into all those lessons, because it's a lot that I want to discuss with you. So I'll open the floor up for about 15 minutes or so for some Q&A. Go ahead, guys, fire away. You guys are the best. You guys are the best. Maria, Peter, King, Chris, Zuga, I love you guys too. Paul, I love you guys too. Yeah, hell yeah, Sean. I think so too. Yeah, let's follow Sean Miller's lead here, guys. I want every single one of you right now. I want every single one of you guys right now to hit that like button for me. If you guys missed me on the YouTube channel, hit that like button for me, guys. I'm excited to get back on the stream with you. I'm excited to get back in the trenches with you tomorrow in chat. And I'm excited to get back down to business. So, guys, smash that like button for me as hard as you can. I want to see as many viewers as we have. I want to see each and every single one of you hit that like button. And then, like I said, we'll take some Q&As, and then we're going to get into the lessons. Nice. Scott Smith, welcome. Scott Smith says, first time here, just started investing in the stock market last week. This is great. Nice. Scott Smith, welcome. Welcome. I'm excited to hear that you just got started. Very nice, man. James Lee says, Mike, I'm really glad you're feeling better. Do you see investors rotating out of tech into recovery stocks, or do you see more growth in tech? James Lee, listen, I think that there is a rotation out of tech, but I don't think it's going to last very long. Like the term rotation out of like is a term that has been getting thrown around a lot lately, and I still think there's tremendous room for tech to grow. I am overweight tech in my long-term portfolio. Okay. I have been overweight tech for a very long time. I continue to be overweight tech. I don't have any plans on changing my weight in my long-term portfolio. I think tech is where growth is, and where it will continue to be. What I think you're going to see is that tech has outperformed so massively compared to some of these other sectors that I think you're going to start to have a rotation out of tech, but it's not going to be an unwinding of positions. Usually a rotation will occur when you have like people really lighten up in some sectors and put money to work in other sectors that they're expecting some type of a shift or some type of a turn, or in some type of a more major factor. I don't think you're going to see a major rotation. I think you're going to see profit taking in tech, and then money managers are going to take those profits and they're going to then average down or initiate new positions in some value names, like some of you are talking about, some of those recovery stocks. So I think energy is a good place. I think tech profits are going to end up in the energy sector. I think that's one place that I think money managers may look to park some of their profits from tech. If you guys look at the tech industry overall, like the biggest holdings in tech, right? Like every money manager's biggest holding in tech is Apple. Okay. I mean, when you look at Apple, you look at Amazon, you look at Microsoft, you look at Facebook, you look at Google, like nothing compares. Okay. You look at Square, you look at Zoom, it's like nothing. What was, you look at Shopify, okay, like nothing compares. Okay, you look at Spotify, like nothing compares to the gains that you guys have been seeing in the tech sector. Okay, you just look at the Nasdaq, nothing compares. So I think you're going to see just a lot of profit taking in some of those names as those sectors begin to cool off just a little bit. But I don't think you're going to see a blanket overall rotation where you're going to see like this elongated pullback in tech as other sectors outperform. I think tech is going to stall while other sectors catch up. So I actually think that when we do go to all-time highs, because I still am in the camp that we're going to make new all-time highs here pretty soon. I think that the market's going to just kind of float around a little bit until there's vaccine news, and vaccine news is going to push us right to all-time highs. I think that it's not going to be tech led the rally back. Tech led the recovery, right? But I don't think it's going to be tech that's going to take us to new all-time highs. Okay. Now we're talking about new all-time highs on the SPY. Okay. The NASDAQ made new all-time highs like 3 months ago, but the SPY and the Dow are still well below all-time highs. The Dow even more so below all-time highs. The SPY is really the index that everyone's going to be paying attention to because we're at a vicious double top area. Okay, we are at a vicious double top area where a lot of people are going to be looking to get short, and you probably have some shakeout pullbacks off of this double top. I would not be surprised to see the markets maybe give you a big pullback to like 330 on the SPY and kind of shake some people out, but then recover, recoup, and then push to new all-time highs. I don't think it's going to be tech that's going to lead us to all-time highs. I think profit taking is going to occur in tech. Tech is going to stall. And I think it's going to be the other sectors that are going to lead us to all-time highs, the sectors that have underperformed. I think those are going to be the ones that actually push us through on the SPY to all-time highs. Okay, so that's what I think. So, some of you were asking me the question about, do I see a rotation there in tech? Those are my thoughts. What's my outlook on Apple ahead of the split? My outlook on Apple ahead of the split. Apple had just had its rally. Okay, this is its pre-split rally. What you saw in Apple right there was the news of the split. Okay, that's a news of Apple splitting. All right, and also their earnings. I think Apple is still a buy. I don't, Apple's one of my biggest. I think it is actually my biggest. Actually, no, now it definitely is. Weight wise, as far as money that's in my portfolios, Apple is my biggest holding. Um, and when I'm looking at, I'm not saying that I would just start buying Apple here, but any pullback, I think Apple's a good buy. I think after the split, I think Apple probably sees another 20% move after the split. Apple has done, don't quote me on this, but I think they've done like 5 or 6 maybe splits, forward splits. The only one that the stock had gone down after 1 year following the split, it only happened one time, and that was after the split of 1999 when you had the dot-com bubble burst, the internet bubble burst, and you had the huge market crash in 2000, 2001 when all the internet stocks just completely collapsed. That's the only time, and the whole market collapsed. That was a crash. We had a crash in 2000. So that's the only time that the stock did a split and was not significantly higher 1 year following that split. So I still think that Apple is the best run company in the world. I don't see that changing. I only see them getting bigger and better with their services business, diversifying their revenue, entering emerging markets. Guys, they still have a lot of areas of the world, like India is a very untapped market for Apple. They still have a lot of room to grow, and I think Apple will, after the split. I think Apple's gonna move at least 20% higher. Would be my target there on Apple post split. When you trade options, it's the same as trading regular penny stocks, but in a different platform, I guess. No, it's not the same as trading regular penny stocks. Trading options and trading penny stocks are very, very, very different. When you're trading penny stocks, guys, listen, there's some similarities, but there's a lot of differences. The similarities are typically liquidity. Okay, liquidity on options is much, much less than liquidity on the stock itself. Penny stocks, sometimes liquidity will be less as well than trading like a mid cap or a large cap name. Not always, but most of the time. So that's one similarity. Another similarity is the price. You can buy an option for 20 cents. You can buy an option for $1. You can buy an option for $2. You can buy an option, whatever, so on and so on. So that's another similarity. Volatility. Similar, not the same though. You can have far greater volatility in an option than, like, it's very common for you to buy an option at $1. That option could go all the way down to 60 cents, and then it can make its move to 250. Okay. So there's a lot of differences when you're talking about options versus penny stocks. When you're trading a penny stock, it's just all about the price. It's all about the price action. There's no other variable that's going to affect you making money or losing money back except the stock going up or down. With an option, there's more than one variable. It's more than just the stock going up or down. With an option, it's not just the stock going up or down, but it's also when does the stock go up or down. Okay, because time is a factor when it comes to trading options. So that's an extra variable that you do not have when you're talking about trading penny stocks. Okay, so they're very, very different. I do not treat it the same because they are not the same. One of the biggest, most important aspects when it comes to options trading is actually understanding the volatility, understanding the risk of the trade that you're taking. A lot of inexperienced traders do not understand, okay, how options work. And what they do is they find themselves, let's say you have a trader with a small account and they buy like $500 position size, like that's around, like, when they buy a stock, it's like they buy a $2 or $3 stock, they buy a position and it's like $500. Like that's the amount they have in that trade. And then they'll go and they'll place an option trade. And they put like that same $500 into that trade, not really understanding, not really understanding, not really understanding the volatility of that option. Okay. So it's very, very, very possible. Like, It's okay. So let me go back. It's impossible for you to buy an option and risk like 5%. It's impossible. Okay, the option itself moves too much. Unless you're buying an option that expires like a year from now, okay, you're not going to be able to buy an option on the SPY or Apple or Roku or Tesla, Boeing, Beyond Meat. You're not going to be able to buy an option and only lose 5%. It's not possible, okay, because that option contract that's at $1 now could be at 65 cents an hour from now, and then 2 hours from now can be at $1.50. Then can go back down to 80 cents, then can go up to $2. Like, you have to understand the volatility of the option that you're trading, and a lot of inexperienced traders do not understand that. So what will typically happen is a lot of inexperienced traders they'll go to buy an option. They say, I want to trade options. They buy an option. They have absolutely no clue what they're actually risking on that trade because they don't understand the volatility of how options trade. And when they take a loss, they get slaughtered because when they might be buying $500 when they're trading like a small cap penny stock, and they lose, 5 or 6%, and they're like, oh man, okay, that sucked, but whatever, I'm going to move on. But then they go and they put the same $500 into an option trade and they end up losing 30 or 40%. And now that's a big difference. And then all of a sudden you hear the inexperienced trader says, oh my God, I just got crushed. That's because you didn't understand that if you're gonna trade this option, you have to understand you're risking like 30% to potentially make 150. That's how options work. Okay, unless you're going to buy an option that expires several weeks from now, several months from now. If you're going to buy an option contract that expires tomorrow, 2 days later, okay, or expires 3 or 4 days later, you are risking 20 to 50% minimum, guys, minimum. But if the trade works out, you're making 100, 150, 200, 250%. So the risk reward makes sense. You just have to lower your position size to account for that risk. And a lot of inexperienced traders don't understand that. So that's why options and penny stocks are so different. They're very, very different. So I don't want you to think that it's the same, because it's not. It's good. It's drastically. Next question, Mike, do you think overall markets will be weak this week due to lack of stimulus? Man, I have thought, it's a great question, and I thought the markets would have been weak last week and the week before. I thought after July 31st, the markets would have been weak. Okay, after July 31st, I thought the markets were going to be weak when we found out that we have no stimulus. But what happened after July 31st? There's July 31st. What happened? We went straight up. We went straight up right here. No stimulus. That was your deadline, July 31st. There it is. There's your deadline for Congress to come to a deal for stimulus. And the markets just went straight up. The markets just went straight up. So it seems like nobody gives a damn about the stimulus, which I think is wrong, by the way. I think that this is a major issue. Okay. You had Americans getting $600 a week unemployment checks, and that stopped July 31st. That's a lot of money for people. And with the amount of people that we still have unemployed, I mean, I think that's going to hurt. You also have now the what's it called? Evictions. People are, July 31st, that eviction protection also expired. So landlords are starting to evict people that are not paying their rent. And that's where that unemployment benefit, that $600 a week that people were getting, most of that money was going towards some of those rent payments. So I think it is a problem. I think that the markets should be weak because of lack of stimulus, but we've had now 2 weeks, not just 1 week, 2 weeks without any stimulus, and the markets have moved higher each and every single day. So it feels like the market is just of the mindset that, yeah, you know what, it doesn't matter. We're just going to keep going higher. They'll figure out the stimulus whenever they do. But I think that's the wrong way for markets to be looking at it. But what the hell do I know? The market's the market. The market always proves to be right. It's something that I think that needs to be fixed and needs to be addressed. And I think the market is too optimistic that we're just going to come to an agreement, because that's great. Yeah, if they come to an agreement, but when? Is it going to be 2 weeks from now? Is it going to be 2 days from now? When? when's it going to be? Because do you really think that I don't even know how many people are unemployed now, 10 million, 12 million, whatever the number is. Do you really think all those people can go an entire month without the $600 a week? I don't think so. I don't think so. So, yeah, I would expect markets to be weak coming in, but so far has not been the case. On entries, when you identify support on a pullback and it bounces off that area, is that when you would jump in or let it bounce, then pull back a little, then jump in? Okay, that's a loaded question because it depends. So there's two different types of entries that I'll look for, guys. Specifically, when you have a stock. Now, for those of you that may not know me, if you're new to the channel, I'm a conservative style trader. Conservative versus aggressive has nothing to do with position size. You can have a trader that trades with $500 and they can be aggressive. You can have a trader that trades with 5 million and they can be conservative. Conservative versus aggressive has to do with your entries. Where do you enter your trades? Conservative traders will buy pullbacks into support levels. Aggressive traders will buy breakouts through resistance levels. That's the main difference. All right. So when I'm looking at pullbacks into support levels, there's two different options that I have. Option one is buy in front of the support level, anticipating it being beneath me. Option two is wait for the stock to bounce off that level, confirm the support, and then get in. Those are your two options. Now, there's going to be situations where I will just anticipate the support underneath me and I'll jump in on the very first pullback prior to that support test. But that's when all of the stars align. That's when everything that I'm looking at on my chart pattern and my setup is exactly what I want to see. Okay. So, for example, when a stock breaks through the high of the day, right? Use that as an example. So let's say it's a huge, strong increase in volume. It's the heaviest volume of the entire day. Check. That's checkpoint number one. Huge volume increase through the high. Check mark number one. Check mark number two is a low volume pullback. Okay, that's check mark. Okay, low volume. So volume is decreasing as the stock pulls back in to retest that prior high. Then maybe the 23.6 Fibonacci level lines up with that prior high. VWAP lines up with that prior high, and the trade line also lines up with that prior high. That's as good of a setup as I can possibly ever hope for. So in a situation like that, you may see me anticipate that support level at the initial high, VWAP, 23.6 fib, and trade line. That's when you'll see me anticipate that. Okay. But now let's say that exact same setup occurs, but the volume on the pullback is a little heavy. And when I say a little heavy, hold on one second, guys. Okay, sorry about that. I was just reading messages. So anyway, guys, what I was saying, I lost my train of thought. Okay. So let's say the volume on the pullback is a little heavy, right? So like I said, you always want to see increase in volume on the way up, decrease in volume on the pullback. But let's say we get the increase in volume on the way up, but the volume on the pullback is still kind of heavy. It's not like maybe it's like 5 million shares on the way through the high, and maybe it's like 4 million shares on the pullback. That's heavier than I would like to see. Ideally, I want to see like 5 million on the way through and like 2.5 million on the way down. Okay, that's really where I'm like, okay, check, check, check. I love it. I'm going to anticipate that support being beneath me. But if the volume on the pullback is a little heavy, it's a good pattern, but it could be better. And when I have a situation where I've got a really good pattern, but it could be better, in a situation like that, I might wait. I might wait for that support level to show its face. Okay, I might wait for that support level to show its face and then bounce off, and then I'll look to enter the trade. And once the stock bounces off that support level, I'm jumping in. All right, I'm not going to try to get overly cute with my entry. Your stop loss still remains where your stop loss is, and then you just adjust your position size if you find yourself buying the stock a little bit higher depending where you would like. Like, let's say $5 is support, your stop loss is like 45. You want to buy it at 510, but the stock is sitting at 520. Don't get too cute with your entry and you're just sitting at 510 waiting for it and it never comes back and just goes. If you got to buy it at 520, buy it at 520, but just adjust your position size because now you're buying at 520, not 510. Your stop loss still remains 45. I got, yeah, thank you, OG Khan. Guys, listen, if you guys have not done so already, please make sure to share this stream on your Twitter or Facebook, guys. All right, guys, do me that favor. Guys. Before I take my next question, I want to make sure you guys all share this stream onto your Twitter and or Facebook for me, guys. I see we got a bunch more likes on the video. I appreciate that. We're still weak though, guys. I know there's still many of you that did not hit that like button yet. Get busy, guys. Hit that like button. Get busy. Share this stream on Twitter and Facebook. Let's educate as many traders as we possibly can. Yeah, guys, we're streaming live right now on YouTube, but also on Facebook and Twitch. All right, so we're streaming live right now on Facebook, YouTube, and Twitch. So welcome, all of the newbies. Ooh, my throat. The newbies, welcome to you all. Yeah, Justin Fox. Justin Fox says, yeah, guys, get busy with that like button, just like the Yankees are getting busy destroying the Red Sox. Yes, Justin, my man. Yes, my man, you're the best. Great question. Mike, I've seen you enter VWAP trade line crosses early to anticipate, but sometimes you wait for the cross. What determines which one you do? Excellent question. It's the rest of the setup. Okay, it's the rest of the setup. You know, sometimes when I'm anticipating a cross, a lot of times you'll see me enter a tier one. Okay, if I'm anticipating a trade line VWAP crossover, it's a lot of times you'll see me enter a tier one. Now, for those of you that do not know, tier one it's a starter, it's a feeler position. It's when you think you see something, but you're not quite sure. Tier one is 25% of your desired size. So if you wanted to buy 1,000 shares of a stock, tier one for you would be 250. Okay, tier one would be 250. And a lot of times, what you'll see me do to the person that asked this question, if I'm entering that trade early, it's because the trade line is now acting as support. There's some other level beneath me. Maybe there's a Fibonacci level beneath me. Maybe there's a prior high beneath me. Maybe there's a major moving average on the daily chart beneath me. And that trade line's coming up and it's holding support right at that level. And you see the stock is holding it as that trade line is pushing the stock higher up towards VWAP. And once you get towards VWAP, that's your moment of truth. When the trade line pushes the stock back up towards VWAP, that's your moment of truth. You want to see the stock shoot through VWAP, big price increase, big volume increase, and the trade line crosses over. That's your confirmation. So what I'll tend to do is I'll buy tier one underneath. Once I get the crossover, typically I want to see a break through VWAP, a pullback, test, hold, trade line crosses over. That's my confirmation. I add to my full size and I get my move. Okay. So that's usually what you'll see me do. If I'm anticipating that trade line cross, it's usually tier one. Okay. It's usually tier one because the risk reward on the entry is fantastic, because if I'm buying before the cross and then we actually do get the cross and it confirms, I'm going to get a great move. I'm going to get a big move. I'm going to get probably 5, 6 R on that trade. You know, if I'm risking 50 cents, I might be making $3 on that trade. because I'm buying beneath VWAP and beneath that crossover when you're anticipating it. Okay. Very rarely will you ever see me enter full size beneath that VWAP cross. And if I do, it's only because the quality of that setup is picture perfect. Like maybe it's my entire game plan could be like, okay, guys, maybe $10 is a major resistance level on the daily chart that's held for 3 years, has been tested 5 times. All times it failed at $10, it pulled back in, and all of a sudden today the company comes out with a press release. They got a $50 million contract with the U.S. government, and it gaps above $10 to 11, and all of a sudden the stock pulls back into 10, and then the trade line lines up at 10, and you have other support levels that line up at 10. Maybe the 200-day moving average is there as well, and that trade line is starting to hold support. In a situation like that, I'll enter my trade full size, anticipating that trade line view across, because that's a little bit of a different setup. It's a different setup because the trade line VWAP crossover is my trigger, but the overall setup is the gap above the $10 resistance, the 200-day moving average sitting at $10. Maybe there's a Fibonacci level sitting at $10. That's the setup. The trade line VWAP crossover is the trigger. So when you're basically, what it comes down to is, if the trade line VWAP crossover is simply an intraday setup, and the stock is on your watch list now, and it has your attention simply because of that intraday setup, that's where I'll enter tier 1. I'll wait for that trade line view across to be confirmed to add to my position, versus if there's a much bigger, broader setup, like the example I just gave you with $10, then all of a sudden that trade line view across is not the sole setup of the trade. There's a much bigger picture that we're looking at, and that trade line view across intraday, excuse me, it can really be your catalyst, or it can be your trigger for that breakout move. That's when I might anticipate with a full size position prior to that cross. Okay, so I hope that makes sense. Okay. Sorry guys, just having a quick sip of water here. My throat's still hurting. Okay, now, next. That does it for our questions. Okay, that does it for our questions. Now I'm going to get into the lesson part. I'm going to get into the lesson part of the stream, because I told you guys I have a lot that I wanted to talk about. Because the point of this stream tonight is to explain to you guys how to pick your own winning stock picks, how to pick your own trades, and how to know where to focus your attention. So I'm going to walk you guys through right now my checklist on how I build my watch list and how I go about organizing my watch list. Okay, so you guys, this can help you stay okay. So, how to organize your watch list. Okay, first let's talk about my checklist. How do I build my watch list? Then we're going to talk about how I organize it and how I come up with my game plans. Okay, so what do we got? We've got, what's my checklist? What do I look for pre-market? Okay, now what I look for pre-market is leading gappers. Very simple. Nothing special. Leading gappers. What stocks are gapping up the most? What stocks are gapping down the most? And I will look to see what are the stocks that are in play based on a gap scanner. Okay, stocks that are gapping up the most and gapping down the most. Okay, that's number one. Okay, what I will then do is take a look at, of the stocks that are gapping up, okay, that are gapping up or gapping down, of the stocks gapping up or gapping down, I'm looking for what's the volume on these gaps. Okay. Now, if you have a stock that's gapping up 20, 30%, but it's only traded like 10,000 shares, I don't care. Okay. I don't care. I don't care about low volume gap ups. I really don't. I don't care. So I will look for, I want to see a stock that's trading like 10 times average volume. Like I want to see a stock that's trading millions of shares on that pre-market gap. That's a stock that's going to have my attention. So of the stocks now, again, let's say we've got 20 stocks that are gapping up more than 20% on the day, right? I'm going to say, okay, which ones have really good volume? Maybe now that shrinks it down to 15. Okay, maybe 5 of them have real light volume. So now it shrinks it down to like 15. Then I'll say, okay, what's the reason for this gap up and this pre-market activity? Is there news? Or is the stock just moving because it has a small float? Is there news? Is there a fundamental catalyst that warrants this type of action pre-market? Yes, some have news catalysts, some don't. Some have better news than others. Some have, maybe it's an FDA trial data that gets released. Maybe it is a government contract that they just won. Maybe it's a buyout rumor, something along those lines. Then you might have some stocks that gap up because they maybe added a board member, or maybe they're providing like an update to some press release that they put out a month ago that really isn't anything new with the company fundamentally. So I'll look to see what's the reason, what's the catalyst for this gap up, what's the catalyst for this action. And the ones that have the strong fundamental catalyst that warrant this type of move, you have to ask yourself, is this a press release that changes the fundamental value of this company? That's what is going to cause the stock to gap up and stabilize and hold that percentage gain. Okay, if it's a press release that's just going to get people excited because there's news, but it doesn't really necessarily change the fundamental value of the company, that's going to be a gap up. It's going to be a lot more likely to be faded. So once I go through that, I see, okay, what's the news on these stocks and which ones warrant this type of a gap up, then that my watch list now gets even smaller, because the ones that don't have news, or the news is complete garbage or fluff, they get kind of pushed to the side. So now what am I doing right now? I'm just narrowing down my focus. I'm narrowing down the basket of stocks that are going to be on my watch list. Then I will say, once I go through that, we look at the news. The next thing that I do is I take a look at the daily chart. I look at the daily chart. I want to know, where's my levels? Where's my key support levels? Where's my key resistance levels? Where are my major moving averages? Where's the 100-day? Where's the 50-day? Where's the 200-day? What's the MACD look like? I want to know what the daily chart looks like once I then go and I take a look at these stocks. So now I've got the stocks that are gapping up on the day, that have really good above average volume, that have a major fundamental catalyst in some type of a press release or some type of an update with the company, okay, that warrants that move. And then I look at the daily chart and identify, okay, what's the setup here? Is there, let's say, for example, there's a major resistance level at $8, major resistance at $8. One of these stocks, okay, is gapping up to $7.50. It's below that $8 resistance. And every single time this stock has got to $8 over the last couple of years, it's failed and it's pulled back in. Then we have another stock, and let's say there's major resistance at $10, and the stock is gapping up to $11.50. We're gapping above that major resistance level. Of those two stocks that make it to, as I'm narrowing down my focus on my watch list, which one do you think is going to have my attention more? The one that's gapping up below and into a major resistance level, or the one that's gapping above a major resistance level? Right? Simple. The one that's gapping above that major resistance level, because now I'm looking for that resistance to now become support versus the other stock still has to break through that level. So when you talk about narrowing your focus and staying focused, okay, during market open, you have to be able to narrow your focus of list of stocks that you're trading. And what I will do is, once I go through that entire process that I just shared with you, how to build your watch list, that's how I go through building my watch list. Once I go through that, I then will say, okay, what's my top 3? Let's say 7 stocks make it to my watch list, right? What's my top 3? And my top 3 are going to be my top 3 because of the setup on the daily chart. Which stock has it all? What stock has maybe a low float, has a high short percentage, has a fantastic fundamental press release, is gapping above a major resistance level that I can look to become support now. Like, what stocks have it all? Those are going to be my top tier of my watch list. It's going to be made up of 2 or 3 stocks max, no more than 3. My top tier watch list is made up of no more than 3 stocks. Okay, there's 2 or 3 stocks that I like best, and those are the 2 or 3 that I will focus on right off the bell. That's where my attention is. I'm not looking at any of other stocks right off the opening bell. I'm focusing on those 2 or 3 to see, does my game plan come to fruition? Okay, I'm going to talk to you guys about building your game plan in a second. So, does my game plan come to fruition? Is the stock what do I mean by that? Is the stock doing exactly what I think it's going to do? And if the answer is yes, I'm going to be ready to pounce on that stock and get ready to be in that opportunity like this. Windows of opportunity open and close very quickly, especially in the morning, especially on those small cap stocks. So it's very important that you have a game plan. You're ready to act, and you're ready to act quickly. Okay. So that's how I go about handling my watch list and staying focused. Let's say 15 minutes go by. Those 3 stocks that were my top tier, that were my favorites, neither one of them is doing what I thought they were going to do. The game plan is not coming to fruition. Then I will shift my focus to my second batch or my second tier of stocks that are on my watch list. So let's say I said maybe there's 7 stocks on my watch list. My tier 1 is like 2 or 3. Then the rest, my tier 2 is like 4 or 5. Okay. And then if those first 2 or 3 are not doing what I think they're going to do, then I can start to pay less attention to them. And then I can focus now, look at my second batch, my second tier, and say, what are you guys doing? Are any of you doing what I thought you were going to do? And if the answer is yes, then that can give me the confidence and the quickness to pull the trigger when the opportunity presents itself and have confidence in that analysis because the stock is doing what I think it's going to do. All right. That's what it comes down to. And that's how you can go about building your watch list, but also organizing your watch list. A lot of people talk about, well, how do you build your watch list? And your watch list ends up with 20 different stocks on it, 15 different stocks on it. That's not going to do you any good. You can't follow 20 different stocks at once. You can't. You can't. I can't. So I know you can't. Okay. If I can't follow 20 stocks all at once within the first couple of minutes, you can't either. Okay. So it doesn't do you any good building a watch list if you can't organize it properly. And a lot of people don't talk about organizing your watch list. And that's how I go about organizing my watch list. And that's how I stay very focused in the morning. And that's how you guys can really hone in on specific stocks and specific setups by staying focused early on. Don't worry about what people are talking about on Twitter. Don't worry about what people are talking about in the chat room. If you got 2 or 3 stocks you absolutely love, you focus on those 2 or 3 stocks and you stick to your game plan. You don't let anything else distract you from that. Okay. Because it's your analysis. That's where your focus is. That's where you're going to have the best opportunity to profit. So stick to your game plan and stick to your watch list that way. Okay. Now let's talk about building your game plan. How do I come up with my game plans? Very simple, guys. It's all technical analysis. It's all based on longer time frame charts. I'm not basing this off of pre-market activity. My game plan is not based off pre-market activity. I'm not looking at a stock pre-market and saying, okay, here's my support, here's my resistance, here's my plan, I'm a buyer here, I'm a seller here. I'm looking at the daily chart. The only time I'll look at the pre-market levels like that to dictate my plan is if we're at like all-time highs or all-time lows and there really aren't any other levels to look back to the left that I can look for a type of a setup on the daily chart. So I will build my game plan based on that daily chart. That's why I said to you before, like when I'm organizing my watch list into my top tier, which ones are the best, which ones are weak, or which ones get moved to my second batch or second tier of my watch list, so to speak. And it all has to do with the daily chart. So I will look to see where all the major moving averages, where are my resistance and support levels. Guys, my pre-market game plan is so technically based on technical levels, on support and resistance, basic support and resistance. This is basic technical analysis is where I generate my game plans. And then that's how I get on the right side of a trade. And then you use your intraday technical analysis to actually pick your entries. So if I'm looking at the daily chart, or maybe I'm looking at like a week or a 2-week long chart, 15-minute or an hourly chart, I will identify these levels. Okay, it doesn't have to be the daily chart. It could be maybe a 15-minute chart. I'm looking at like 2 weeks of data, right? So here's your daily chart. I can go to a 15-minute chart. and I can look at, maybe like a month or 2 or 3 months worth of data to identify levels. Okay. So that's one thing that I can do. So like right now, the first thing that I would notice right here in a situation like this, when I'm going to drop my levels, I'd be like, okay, here's a level, bang, right? There's a level. There's prior highs resistance. And then right there, that became an area of support. We tested it multiple times. I'll zoom in so you guys can see this more clearly. There you guys can see resistance, then became support. Okay, just an example, right? And then here, bang, here's another level. Okay, right here you guys can see double top resistance, broke above it, became support, had that huge pullback day, became support again. So there's another support level. Then it's clear as day, right? There's a resistance level right up there. That's your all-time highs. So real quickly, I can start to identify levels. Here's another one, bang. You guys can see here for 2 consecutive days, we found resistance at these areas. And right now, what I'm doing right now is I'm identifying levels. I'm identifying areas of congestion, and I'm identifying potential support and resistance levels, both minor and major. And by doing this, this is how I will formulate my game plan. And I will say to myself, okay, if the stock gets to this level, I'm looking for there to be support. I'm looking for there to be resistance. And I'm coming up with that game plan based on a longer time frame chart, like a 15-minute, looking at several months of data, or a daily chart looking at several years of data. That's how we'll come up with that game plan. But then once the bell rings, you use your intraday technical analysis, like that trade line VR crossover, your Fibonacci retracement levels, your volume analysis on the breaks through highs and all those things. You use all of that type of analysis to select your entry point when it's time for you to enter that trade. So your longer term technical analysis tells you what is the trade. Are we getting long this stock, or are we getting short this stock? Your longer term technical analysis is going to tell you that. Then you rely on your intraday technical analysis to pull the trigger. Okay? And that's how I go about formulating my game plans. Mr. Mastery says, what if it's a false breakout and it goes above 11? What do you do to confirm it continues? It's all going to be based on volume. Okay, the best indication that you guys can have on reading momentum and reading follow through and reading continuation is going to be volume. Okay, the heavier the volume, the more consistent the volume. If the volume is continuously increasing, the greater the chance you have of that stock giving you follow through and continuation. If you get a stock that just pierces through the high of the day, has an increase in volume, then pulls right back beneath it, and that volume just goes right back to normal, and then you have a stock, and then the volume just goes right back to normal. Okay. Sorry, guys. I keep getting distracted. I'm sorry. I keep losing my train of thought. I've got so many messages that are coming through all at once. I lost my train of thought again, guys. I'm not sure where it was. Volume continuation. The stronger the volume, okay? If you have volume that is increasing, consistently increasing, like each volume bar is getting bigger and bigger and bigger and bigger, that's your confirmation of momentum, follow through, and continuation. But if you get a stock that pierces through a high of the day like that with an increase in volume, pulls right back beneath it, and the volume starts to then dry off, that's a warning sign. That's a warning sign. You're not going to have follow through and continuation on a stock if that's what the volume analysis looks like, the volume profile looks like. So that's the best way for you guys to get a gauge on momentum. Volume analysis is crucial when it comes to day trading. It's absolutely crucial because as a day trader, what are you essentially trying to identify? You're trying to identify momentum. Okay, you're trying to identify direction during the day. And the best way for you guys to be able to identify momentum is by analyzing volume properly, analyzing volume correctly. All right. So, no, I do not trade off the 1 minute. I do not trade off the 1 minute. I trade off the 3 minute, and I also use a 5 and a 15, an hourly, a daily, a weekly. Guys, my time frames are as follows. Okay, again, I use a 3-minute chart. That is the shortest time frame chart that I use. I do not trade off 1-minute charts. I use a 3-minute chart, a 5-minute, a 15-minute, a 1 hour, a daily, and a weekly. Those are the time frames that I will look at on a chart. The reason why I do not use 1-minute charts, okay? 1-minute charts, in my opinion, give you way too much noise and way too many false signals. The only traders that I think should be using 1-minute candles are micro scalpers. Okay. Now, if you are a micro scalper, what do you Mike saying? Well, Mike, what's that? I don't know what that is. I don't know. Am I? I don't know. What is it? A micro scalper is someone that gets in and out of trades within seconds. Okay. You buy a stock, you sell it 6 seconds later. Okay. If you're getting in and out of stocks within seconds, like your trades are lasting 10 seconds, 20 seconds, 30 seconds, 45 seconds, like if that's how long your trades are lasting, you are a scalper. All right, you're a micro scalper at that point. Because a scalper, their trades might last 1 to 2 minutes. A micro scalper, their trades last seconds. Those are the only traders that I think should be using 1-minute candles, because your trade is literally taking place within that 1-minute candle. You should be looking at that. You should be looking at that information. I am not a micro scalper. I'm not a scalper in general. Okay. My trades last several minutes to several hours long. So therefore, for me, 1-minute candles do not work. They do not make sense. It's way too many false signals. It's too much noise. The 3-minute candle really helps get rid of the noise and get rid of the okay. I don't need to see every single tick for tick I don't need to see every single buy and sell that goes on. I just want to get a good feel for price action, but also kind of ease out a lot of the noise. And that's why the 3-minute candle works best for me and my style. And that's what I'm more comfortable with. Now, again, if you are a scalper, then yes, you should be using 1-minute candles. I am not a scalper. Therefore, I do not use 1-minute candles. Okay. So moving on to the next piece of this lesson, which is because now, right, I wanted to talk to you guys on how to identify your own stock picks, how to find your own stock picks. We talked about building your watch list, right? The criteria to create that watch list. Then we talked about the criteria of filtering and organizing your watch list. Break your watch list into 2 different tiers. Okay, we talked about that. Then we talked about your game plan, how to create your game plan. We talked about that. Now it's time to talk about what makes an A+ setup versus a B or C setup. That's the next thing that we're going to have to discuss now. First, let's talk about what is an A, B, C setup. An A+ setup is as good of a chart pattern as you're going to get. Okay, now it's important that you all understand that there is no such thing as a 100% success rate chart pattern. All right, no pattern out there is going to work 100% of the time. Okay, so not one. There's not one pattern out there that's going to work 100% of the time. The best you can look for is statistical probability when you're looking at chart patterns and technical analysis. An A setup is something that's going to have maybe around 70% probability, where when you see this particular chart setup with this specific criteria, there's a 70% chance the stock is going to move in one direction versus the other. That's an A setup. That's about as good as you're going to get. So you want to be able to identify these A setups and put yourself in those A setup situations on the right side of the statistical probability being the 70%. And you want to do that over and over and over and over. Okay. A B setup is it's still a good chart pattern, but the statistical probability is maybe a little bit less. Maybe when you see this pattern, it's a good pattern, but it could be better. Maybe that's got a 65% probability. Maybe an A setup is 70 to 75% probability. A B setup is maybe 60 to 65%. Okay, statistical probability that when you see this particular setup with this criteria, the stock's going to resolve itself in one direction versus the other. So still a good setup, but it could be better. All right. Then you have a C setup. A C setup is, yes, does the price action form this type of a pattern, whether it's a bull flag, a head and shoulders, a TG triangle, a cup and handle, an ascending wedge? Does it form one of those patterns? Yes, it does. But there's a lot wrong with the setup. there's a lot that could be better. And therefore, this is a C setup, which is more like a 50-50 crapshoot. You got a 50-50 chance the stock can go up or the stock can go down. And you want to be able to stay away from those C setups. Okay. So now you might be saying, well, Mike, how do I know? How do I know if it's an A, B, or C setup? How do I know the difference? Volume is going to have a hell of a lot to do with it. Okay. Couple of things we're going to talk about. Volume has a lot to do with it. Volume analysis and understanding where you want increases and decreases in volumes in specific chart patterns. All chart patterns are not created equal. I can show you guys 10 bull flags, and all 10 of them will not be created equal. Maybe 3 of them are A setups, 5 of them could be B setups, and 2 of them could be C setups. But they're all still bull flags. So you have to get to a point where you're able to identify the A bull flags from all the rest. Okay. And you want to stay away from the rest. You want to focus on those A setups. You want to become a sniper, not a machine gunner. Okay. A machine gunner goes out there and they place 20, 30 trades throughout the day, and they're just firing away. They're firing away. They're just trading every single thing that comes across their screen. That's a machine gunner. Okay. You're trying to make your profits by trading more. Okay. A sniper is going to be patient. They're going to wait. They're going to wait in the grass. They're going to wait for that perfect opportunity. They're going to wait for that where they have the highest probability of hitting their target. That's what a sniper does. A machine gunner doesn't wait for the best quality opportunity where they have the highest probability of hitting their target. A sniper does. So I teach all my TGG members, and I myself am a sniper. Guys, a busy day for me is 5 or 6 trades. That's a busy day. A regular day is 3 or 4 trades. A slow day is like 0 to 2. Okay. So I am a sniper. Okay. As clear can be, I am a sniper. And I teach all of our members to trade with that same mindset, because you just want to wait for the A setups. So going back to those 10 bull flag examples, you want to make sure that you understand volume analysis in the setup. Like I'll use a bull flag as an example. With a bull flag, you want to see an increase in volume when the flag pull is created. You then want to see a decrease in volume when the flag is created. That is the proper volume analysis for a bull flag. Now, you could have okay, you could have a bull flag that sets up, but maybe there's an increase in volume on the flagpole, but there's also an increase in volume within the flag. Now, yes, that's still a bull flag, but it could be better, because that volume increase inside the flag is not ideal. Does it completely negate the pattern? No, but it could be better. You guys want to learn how to use multiple technical indicators in conjunction with one another. That's the biggest part of identifying an A setup from a B or C setup. Okay, is being able to say, okay, how does a Fibonacci retracement level and VWAP and the trade line and a MACD, how do they all work together? Because you don't ever want to buy a pattern based off one technical indicator giving you one signal. You want to base your trades on 3 or 4 indicators that are all lining up in the same area, that are all giving you the same signal. That's going to give you the highest probability of a potential pattern. Think of it this way. You have traders out there that trade based off Fibonacci levels. You have traders that trade off there based off of VWAP. You have traders out there that trade off of the trade line. You have traders out there that trade off of initial morning highs. So when you have an initial morning high, VWAP, a Fibonacci level, and a trade line all lining up at that initial morning high, that same price point, all of those traders that trade off those indicators are all going to be at that spot. And if they're all buying at that location because of the indicators there, that's going to give you the highest probability of that support level holding. So as a trader, I will look for areas where multiple support indicators are all converging at the same price, because that's going to give me the highest probability that a particular level or pattern is going to work itself out. That's what identifying an A versus B setup is all about. Let's go back to that bull flag example. Say you have a bull flag, okay, huge increase in volume on the way up, decrease in volume during the flag. and let's say the bottom end of the flag lines up with the 38.2 Fibonacci level. It also lines up with VWAP, and the trade line is coming up underneath the flag as well to give you a trade line VWAP crossover right beneath the bull flag that could potentially break the bull flag up out of the flag and give you that follow through. That's an A plus setup, because not only do I have proper volume analysis on the chart setup, but I also have multiple indicators all converging at the same price point, giving me the same signal. That is an A plus setup. Now let's go to a B setup. A B setup on a bull flag could be maybe everything I just said to you. Increase in volume on the way up. Maybe you've got the 38.2 Fibonacci levels, the bottom part of the flag. VWAP is there. The trade line is there, about to cross over to push that bull flag higher. But you've got an increase in volume inside the flag. Now, that's a good setup, but it could be better. Therefore, that volume analysis is not ideal. The setup is still there. Those indicators are still there. But the volume analysis is not ideal. This does not completely say throw the pattern out the window, but it does not make it A+. It's still probably a B setup. Same thing can be said, another example. Increase in volume on the way up to create the flagpole. Maybe we get a decrease in volume, okay, to create the flag. But let's say the bottom part of the flag holds the 23.6 Fibonacci retracement level, but VWAP and the trade line are far below the flag. Now you only have one support indicator. That's the 23.6 Fibonacci level. Your VWAP, your trade line, and your initial morning high are beneath it. Another example of a B setup. A B setup because, now the volume analysis is perfect, but you only have one support indicator, not 3 or 4 converging on that same price point. You guys starting to see the difference between an A+ setup and a B setup? Then you have a C setup, which would be, the combination of all the bad things that we said. Maybe increase in volume on the way up, increase in volume inside the flag, and only the 23.6 Fibonacci level to give you support. That's going to be your C setup. And this is how you guys go about identifying A+ setups versus a B or a C setup, and have the patience and discipline to wait for those opportunities and pull the trigger when those opportunities present themselves. Okay? That's what it's all about. That's what A+ versus B, C setups is all about. Okay? All right. So, my dog's barking. All right, guys, anybody have any questions about what I just said? Thank you, David. David says you're the best teacher. Thank you. I appreciate that. I appreciate that. All right. No questions, huh? Yes, Rodrigo, you should avoid C setups you should avoid C setups all the time. You should avoid C setups all the time. Good. Paul says, go get some rest. I will, man. I'll get some. We're going to finish up here in a little bit. I will. I'll get some rest. I want to be fresh for tomorrow. How often do you trade B setups? I mean, not that often. I try to stay away from, I really try to wait for those A+ setups. And that's why, I'll only trade maybe three or four times throughout the course of the day. I really try to focus and wait for those A+ setups. Mike, how do I size up? You size up, guys. I'll talk about this. This is a long, actually, I can do an entire lesson just about sizing up. But just for the sake of time on this stream, um, you guys want to size up when you are consistently profitable, okay, for I'd say at least a couple of months. Okay, be consistently profitable for a couple of months with the current risk that you're at. And when we talk about size up, we're talking about increasing your risk, not necessarily increasing your position size, because we're talking about increasing your risk. Your risk should be the same for every single trade that you make. If your risk tolerance is $500, or let's say your risk tolerance is $100, just for easy math. Let's say you're comfortable risking $100 per trade. Every trade you make, I don't care if it's a $1 stock or a $10 stock. Every trade you make, you're going to be risking $100 based on where your stop loss is, and you adjust your position size accordingly so that if you do get stopped out of this trade, you will lose $100. That risk tolerance is going to remain constant for at least a couple of months while you prove yourself consistent profitability. Once you prove yourself consistent profitability for a couple of months, you will then increase your risk by 25%. So if you went from risking $100 per trade, now you're going to start risking $125 per trade. You will then prove to yourself consistent profitability for at least 1 or 2 weeks at the $125 per trade risk. The reason why you only want to increase by 25% is as follows. You want to make sure you don't want to go too far too fast, because you want to make sure that your emotions do not change. You want to make sure that emotionally you can handle the new risk. And the best way to do that is to slowly climb higher, not go from risking $100 a trade to now all of a sudden you're risking $300 per trade. That's going to be very hard for you emotionally to deal with, and for you to keep emotions out of the trade. And everything that worked for you up to this point to where you said you want to increase your risk, it all goes right out the window. Okay. That's one reason why you want to do this slowly, to keep your emotions in check. Second reason why you want to do this slowly is because if you do increase your size and you find out that you're just not ready for it and your emotions are completely out of control, you don't want to take 1 or 2 losses and it wipes out 2 weeks of profit at your other position, your normal position size. So that's why you want to start this process off slowly. You will literally stair step when you're increasing your size. So once you've done that, your $100 risk, you're consistently profitable for a couple of months, you increase by 25%. Now you're risking $125 per trade. You prove consistent for 1 to 2 weeks now at that. You say, I don't feel any different. My emotions are completely under control. I can handle this risk, no problem. I'm still consistently profitable. I'm trading well. Let's bump it up another 25%. So now you bump up another 25%. So now you're risking like whatever that comes out to, like $160 per trade, whatever that comes out to be. It's another 25% bump. Same thing. You stay there for 1 to 2 weeks. You trade through it. You prove to yourself consistency. Your emotions have not changed. Bang, you bump it up another 25%. And you keep doing that. You climb that ladder. You walk those, you stair step until eventually you're going to get to a price, you're going to get to a risk level where you're going to feel uncomfortable. Maybe it's $225. You get to that point and you're like, whoa, this is too much size. I'm not comfortable. My emotions are running. I'm sweating when I'm in the trade. My leg is shaking. My heart is pounding out of my chest. And you say, this is too much for me. The second you feel that, that is your body telling you you have reached your max limit for the time being. Immediately drop down to your last prior level. So say you get to 225 and you're like, whoa, this is too much. You go back down to whatever the level is prior to that. Let's say 175. I'm just making up. I don't know what the math comes out to be, but you drop down one level below that and then you stay there. And you stay there for a couple of months. You prove to yourself consistency. You prove to yourself profitability. You prove to yourself your ability to keep your emotions under control. And then after a couple months of consistent profitability, you start that process again. 25% bump. Prove to yourself consistency for 1 to 2 weeks. Bump it up again, another 25%. Prove it consistently 1 to 2 weeks. Then you bump it up again until eventually you reach another point where your heart's coming out of your chest. You're sweating. That's your body telling you this is too much size. Drop down and you stay there again. And that's how you go about increasing risk and increasing size. Position size. Position size, Travis. So Travis says, Mike, how can you maintain the same risk on stocks with options? Example, the $100 risk that you mentioned. Position size. Okay. If you guys are guys, here's a general rule of thumb. This is not like set in stone, but a general rule of thumb. If you're trading an option that expires, the next day, assume you're risking 50% on that position. So if your risk tolerance is only $100, you can only place a $200 trade. Now, if you're trying to trade Tesla, it's impossible for you to do that. Or Amazon options, it's impossible for you to buy a Tesla option or an Amazon option and only risk $100. It's literally not possible because the price of those contracts could be $10, $12 a contract, which means one contract, if it's $10, one contract is going to cost you $1,000. And if you're risking 50%, that's $500. That's outside of your risk tolerance. You just simply cannot make the trade. You're going to have to stick to lower priced options, whether they're maybe, SPY options that are lower priced or options that are a little further out that are not going to move as volatile. You can't make the trade if that's your risk tolerance. Okay. But you just adjust your position size. So let's say you're trading an option that expires next day. You're risking at least 50% on that option because that's how volatile the option is going to move if it's next day expiration. If you're trading an option that expires in like 2 to 3 days, you're risking probably 30 to 35% of your position. And then if you're trading an expiration that expires like in a week, then you're probably risking about 25% on that position. And that's just a general rule of thumb to help you guys with position size when you're going into an option trade. All right, guys, real quick question. How many of you are on this live stream right now that are not a TTG member? If you have two things, real quick, guys. If you have never seen a TTG live stream before and or you are not a TTG member, quick show of hands, let me know. So again, if you have never seen a TTG live stream before or you are not a TTG member, show of hands real quick, guys. Comment in chat so I can see how many we have. All right. Tone, Stefan, Hyper, Georgia, JT, Michael Manning, Alexis, John Landry, Alan Now, John Leon. Nice. We got a lot of new faces here today, guys. I love it. Oh, I love it. A lot of new people. I love it. I love it. I love it. Guys, listen, for all of you that are brand new, that have never been to a TTG live stream before, congratulations and welcome to joining the family. Okay. What I want to say real quick, guys, is that I understand that this may be the first time. That a lot of you are seeing this or seeing me, because right now we are simulcasting live to a lot of different social media platforms. So right now we're actually live streaming on YouTube, on Facebook, and on Twitch. So we may have this is the first time that I'm doing this, by the way. So there's probably a lot of new faces that are seeing me for the very first time. They might say, who the hell is this guy? So real quick, let me just give you guys a quick little explanation and introduce myself to a lot of the newbies. Now, I know I have a lot of my TTG fam. I got a lot of my YouTube fam that's on this live stream. You guys know me well. You guys have been following this channel and following me for quite some time. But for all the new people that are here as I'm streaming to a lot of new social media platforms, let me introduce to you guys who I am real quick and give you kind of my story a little bit. Okay, my name is Michael Edward. I'm the head trader for True Trading Group. Okay, but prior to joining True Trading Group, I began my trading career working at a hedge fund in New York City. Okay, right out of college, I got hired at a hedge fund. We managed about $500 million. We were a neutral long-short equity fund that also traded some options, but we were mostly focused on neutral long-short equities, which means that we are not a biased hedge fund that only goes long or only goes short. We are neutral based. So we get long things we think we should be long. We get short things we think we should be short. and we can flip flop, okay, depending on market conditions. That's what that means, okay. I began my trading career working at that hedge fund. While at that fund, I had to go through a 3-month educational training program that taught me everything that I implement in my trading here today, right? I did not know what I was doing when I got hired at that hedge fund. I got hired based on my schoolwork, my finance degree, my economics background. I had some micro and macroeconomic classes that I took. I took some econ stat in college, and I had my finance degree, and I got hired based off of that. I did not get hired off of some trading portfolio performance. I didn't know what I was doing before I got hired at the hedge fund. That was my first experience really with active trading. Was working at this hedge fund. And I had to go through this 3-month educational program where before the hedge fund let me trade $1 of their money, I had to sit in a classroom style setting, and different traders and analysts would come in during the day and they would teach us different technical aspects of trading and also fundamental aspects of trading. And I had to pass that curriculum and that program before the fund would let me on the floor to trade with their money. Okay. That is kind of the key point that I want to stick on, is that I was not able to trade with their money until I went through this educational training program. All right. Now, fast forward, the mentorship that I received, because my senior portfolio manager was my mentor also at the fund. He also was my boss and a partner in the fund. Taught me everything that I know. Is responsible for the trader that I am today. If it was not for the mentorship and guidance and education that I received at this hedge fund, I would not be the trader that I am today. And I would not certainly be able to explain to you guys in such a detailed way, because this is how I was taught. Like the way that I'm explaining to you all of these lessons and all these breakdowns is exactly how I was explained. I did not figure any of this stuff out on my own. I didn't learn this in my mother's basement or in some college dorm. I was taught this. And now I'm just sharing with you, and I'm teaching you guys the same things that I was taught. That education allowed me to go on to be one of the youngest junior portfolio managers at my fund. And it also allowed me to go on to receive a Trader of the Year award in 2008. Those of you that don't remember 2008, that was the big housing crisis, the Great Recession, the stock market crash, the subprime mortgage crisis. It was a disaster. The stock market fell like 55% from 08 to 09 in a couple of months. And during that time, when literally the sky was falling and the world was ending, I actually excelled at the hedge fund, so much so that I went on to win a Trader of the Year award. Now, fast forward 2009, my hedge fund ended up closing down. 50% of all funds went out of business between 08 and 09. Literally, 50% of all hedge funds on Wall Street between 08 and 09 closed, mine including one of them. Okay. But had it not been for the experience, education, and knowledge and mentorship that I received working at the hedge fund, I don't know where my life would have gone. I don't know what path my life would have gone down if I did not acquire the skill set that I acquired working at the hedge fund. Okay, my life could have went down a very different path. I thought I was going to be able to just get another job at a hedge fund. I was wrong, because 50% of all the funds closed, and I was going for positions and competing with people that had 6, 7, 8, 10 years more experience than I did. So literally the funds that survived literally had the pick of the litter. And why would you take someone with a handful of years experience at a hedge fund when you could take someone with 10 years of experience? It's a no-brainer. You had people that were 10, 15-year vets on Wall Street that were taking positions of like a 5-year minimal experience person, and were taking the pay cut just to get the job. So when you look at it that way, it was very difficult, and I was not able to get another job at a hedge fund. And if it wasn't for the skill set that I acquired working at this hedge fund, I don't know the direction that my life would have gone down. So everything that I learned at that hedge fund is exactly what I implement in my trading here now today. It is everything that I share with all of our TTG members. Many of you might be asking, what is True Trading Group? And if this is your first time joining me on one of these streams, if this is your first time seeing us in one of these, if this is your first time seeing us in one of these streams or on one of these different platforms, guys, I want to just kind of give you a quick little introduction to True Trading Group and what TTG is all about. Guys, True Trading Group is really the leading online educational platform that focuses really on the educational aspect and showing you how to stand on your own 2 feet financially by showing you the right way to trade stocks and options. TTG is not about, it's not michaeledward.com. It's not, hey, look at me, look how great of a trader I am, look how much money I'm making, just follow me and you can be a millionaire. That's not what TTG is all about. It's not about a gimmick. It's not about a get rich quick scheme. It's not about some secret pattern or some secret strategy that I've unlocked the key to success in the markets. And no one knows this secret besides me. And I'm going to share it with you if you guys just join me. That's not what your trading group is all about. TTG is focused on a real professional education. When you guys join TTG, you get the same education that I received working at a hedge fund managing about $500 million on Wall Street in New York City. The education I received in that 3-month educational program is the same education that you receive as a member of True Trading Group. The focus here is to help you stand on your own 2 feet by getting the same education that I received. You should not have to have Wall Street experience or some fancy Ivy League education to be able to learn the proper way to trade stocks and options. When you go online, you go to Google, you go on YouTube, and you want to learn how to trade stocks and options, you are bombarded with advertisement after advertisement after advertisement of people claiming to have the special sauce or some secret pattern or some secret strategy. And they're showing you, oh, look at my house and my car. Look at these wads of cash. It's complete bullshit. It's total nonsense. Nobody can actually explain to you a professional education. And that's the void that TTG fills. Because at True Trading Group, you guys do not get any of the bullshit. You guys don't see my house, my car. You guys don't see my stacks of cash. Okay, what you guys do get from me is education, mentorship, and guidance. And True Trading Group provides you guys with resources and tools to help you become consistently profitable traders. It's not just about, hey, follow me. It's not just about, hey, follow me. We offer a full curriculum covering new traders all the way up to the most advanced. Okay, I have taken the 3 months of the education that I received working at the hedge fund. I've simplified all of that material and I've created beginner courses and advanced courses. We have beginner and foundation stock trading courses. We have advanced stock trading courses. We have beginner options trading, advanced options trading, trader psychology part 1, trader psychology part 2. We've got how to trade a stock market crash, which is fitting because I excelled during the 2008-2009 crash, winning trader of the year. And then I excelled again in the month of March with the coronavirus crash, was one of the biggest months that we've had in a while. And I was also adding to some of my long-term portfolio positions. And a lot of TGD members were able to buy stocks like Apple, Amazon. We were Facebook, Microsoft, AMD, NVIDIA, TNDM, Square, Shopify. We go in Home Depot, Johnson & Johnson. You guys go down the list of the stocks that we were buying in March and April when everybody else was panicking in True Trading Group. Those were some of the stocks that we were adding to long-term portfolios. And every single time I bought a stock in my long-term portfolio in March and April, I told my THD members, guys, this is what I'm doing. This is what I'm buying. It's not just the trade alerts during my active trading session, but I share a lot of my long-term investment ideas and my long-term investment portfolio holdings with my THD members. And a lot of people have been able to bank on these trades tremendously. You guys just take a look at what Apple, Amazon, AMD, NVIDIA, you take a look at what some of these stocks have done since March. It's insane. I'm up 100% on some of these positions. It's ridiculous. Okay. It's insane. Okay. Sorry, guys. Trying to get caught up with everyone's messages. So yeah, like I was saying, guys, so TGG, it's not just about the trade alerts and the stock alerts, although you guys can follow all of my trades, okay? All of my trades are alerted to you guys in real time. You can follow every single thing that I do if you'd like. But really the goal of TTG is for you to understand what I'm doing, understand why I'm doing what I'm doing. Why am I buying this stock here? Why am I selling this stock here? Why do I like this stock, but I don't like this one? Why is this my profit target? Why is this my stop loss? Why am I adding to my position here? Why am I taking profits here? That's the key thing that True Trading Group is designed to teach you, okay? Is yes, you can follow all of my trades, but I want you to understand why I'm making all of my trades. It's not just about trade alerts. We offer an entire platform for traders. We have an entire curriculum, okay? We have an entire curriculum, guys, like I said, that gives you all of those courses. And every single one of those courses comes with an exam at the end. Okay, every single one of those courses comes with an exam at the end. If you score an 85% or higher on the exam, you get a badge for that course. Earn all the badges on all the courses. You guys become THG certified. When you become THG certified, you get literally a certificate. You can share it on social media. I highly recommend you do because it's a hell of an achievement. You can print it out. You can hang it on your wall, put it on your desk. You get a little green check mark in our chat so other members are aware that you have received a professional education. Getting TG certified means you have gone through and you have passed the 3-month of my educational program that I received working at a hedge fund. You have passed a simplified version of that. That's what being TG certified means. So it's a hell of an achievement. It's a hell of an accomplishment. So you guys, I recommend sharing your certificate on social media, print it out, hang it on the wall. It's an accomplishment. Okay. And it lets other members in chat know that you've now completed the courses and your opinion is now more valuable. Okay. Someone that is a new or inexperienced trader and they see you now in chat with that green check mark lets them know, wow, that person is TG certified. They've gone through the entire curriculum. I'm going to pay attention. I'm going to pay more attention to what that person says. That's what being TG certified is all about. We also have a trade simulator. You guys can practice trading stocks and options with fake money and with real-time level 1 and real-time level 2 quotes. We offer real-time level 1 and real-time level 2 quotes to all of our members. If you guys are currently paying some third-party service provider for real-time level 2, you no longer need to, because as a member of True Trading Group, that feature and service is included with your membership. Okay, we also have our daily chat room. Okay, that's filled with with like-minded traders that are all willing to help you guys succeed. Okay, our chat room during the day, I share my screen and I'm on the microphone all day long. So you guys will see what I'm doing. You see my screen, you see the stocks I'm looking at, you see what I'm buying, what I'm selling, but I'm also on the microphone talking to you live in real time, just like I'm talking to you guys all right now. All right. I will always tell you what I'm buying, where I'm buying, what I'm selling, and where I'm selling before I make the trade. I will not ever surprise you guys with, oh, by the way, guys, I just bought this stock. No, I will tell you every single time. And my TTG members that are on this live stream, you guys can verify this in the chat. Comment in chat and tell me if I'm wrong. Every single time that I place a trade in chat, I notify my members on the microphone before I enter the trade. I say, guys, I'm looking at ABCD. If the stock pulls back into $10, I'm a buyer around 10.15. And I will tell people that before I enter the trade. There's a lot of times members even enter trades before I do. And a lot of times members take profits before I do. Because if I say, guys, my next profit target is in front of $12, I'm trying to get out 11.80, 11.90. Okay, when the stock gets at 11.80, 11.90, other members are actually taking profits before I do, because maybe I take profits at 11.87. Well, members are taking profits at 11.75 up to 11.85, 11.90, because I told them that's my take profit area. That's where I will be selling my position. And members are able to act on that before I do. And that's really the key. It's being able to say, okay, this is what Mike is doing. This is his game plan. This is why he's doing this. I understand. This makes total sense. I'm going to follow this trade. That's what being in our chat is all about. Okay. It's the screen share. It's the audio analysis. We also have a large group of TG moderators that are in our chat. I'm going to talk to you guys about them in a second. But the trade alerts, okay, whenever I enter exit trade, or any one of our moderators enters or exits a trade, you get a push notification in chat. We also have a mobile app that you can download. Okay, it's downloadable on iPhone or Android, where you guys can see the screen share, listen in on the audio analysis, even if you're not able to be in front of your computer. We understand that a large portion of our THD members are not able to sit in front of a computer all day long. They have other 9-to-5 jobs. They have kids. They've got other responsibilities that take them away from the computer during the day. I still want to make sure those members can benefit and profit from the THD platform and profit from all of our trade alerts. So we built out a mobile application where on your smartphone or tablet, you can see the screen share, you can listen to the audio analysis, and you get real-time push notifications on the mobile app whenever myself or one of the other moderators enters or exits a trade in real time. This makes it seamless and easy for you guys to trade on the go, whether you're in a meeting, you're on a conference call, you're at your kid's soccer game, you're on the golf course, you're stuck in traffic, whatever it is, you guys can follow along with what it is that we're trading in chat by using that mobile application. Okay. We've got, now going back to the moderators, when I said to you guys that True Trading Group is about more than just me. Okay. We have an entire group of professional traders that support myself and the rest of the THD group and family that are moderators in our chat. You've got Jason Simmons, Alex Campbell, Jay Downing, Chris Toner, and who many of you guys may know from Twitter, Jason Spetafor, the Wolf of Wheat Tree. Those are the other 5 moderators aside from myself. There's 6 of us total that make up the moderators in our TeachD platform. Each and every single one of these members have gone through and received the same education that I have received working at a hedge fund, and they all specialize in different things. So we have different pro traders, each with a set of unique skills that adds value to TTG. Okay, we've got Jason Simmons, also known as the Professor. Okay, his specialty is chart breakdowns, market breakdowns, trade analysis. He goes over all the commodity updates. What's oil doing? Natural gas, gold, silver. Jason is on top of all the commodity updates, all the market updates. Okay, news. He is on top of all of that stuff, and he does wonderful at breaking down charts. Then you have Chris Toner. Chris Toner only trades options. Okay, and get this: over the last 30 days, Chris Toner is sporting a 94% win rate over the last 30 days. Now, can you keep that up over the course of an entire year? Most likely not. Okay. But 94% win rate in the last 30 days is insane. Okay. Absolutely insane. 94% win rate for Chris Toner. Now, Chris Toner is one of our option gurus. I also call him the DD master because he's the due diligence master. Chris Toner is, he is so fast in getting news updates. His due diligence is so fantastic on digging into company news and company fundamentals and earnings and corporate updates. He is so good at that. And that has allowed him to sport a 94% win rate in just the last 30 days alone. You also then have Jay Downing. Now, Jay Downing, okay, starting as of actually tomorrow morning, is exclusively swing trading and focusing on swing trades for people with full-time jobs. So Jay Downing is a swing trader whose sole focus is swing trades that people with everyday 9-to-5 jobs can follow because they are trades that last several days. He is sporting a 75% win rate in just the last 30 days. Okay, so we have, again, Jason Simmons, who's on top of all the commodity updates and market updates. You got Chris Toner, an options trader and guru, due diligence master, 94% win rate in the last 30 days. Jay Downing, swing trades specifically for people that work full-time jobs so they can follow along easily, sporting a 75% win rate. Then you have Alex Campbell. Now, Alex Campbell is also a small cap swing trader, but he's a small cap scalper with a 71% win rate over the last 30 days. Okay. Now, Alex really focuses on all the small caps, the penny stocks, the real fast moving stocks, those cheaper stocks, those $1, $2, $3 stocks. That's Alex Campbell's specialty. He also is our crypto trader. Alex has been on top of and in front of almost every major Bitcoin move that we have seen so far in 2020. He was on top of the pullback in Bitcoin. He was on top of the rally back in Bitcoin and called those moves both ways. He is our small cap specific scalper, and he's sporting about a 71% win rate in just the last 30 days. Then you guys have Jason the Wolf Spetafor. Jason the Wolf Spetafor, many of you may know him. He focuses on options momentum trading, and he is sporting a 93% win rate in just the last 30 days. So, guys, these are the moderators that we have in chat that make up the TeachD platform. And then, of course, you have myself. Okay. Now, I trade everything. I trade small caps, mid caps, large caps. I trade options. I trade ETFs. I do not trade crypto. Okay. I do not trade crypto. But that's the team that makes up the TTG group and our TTG moderators. And each one of our moderators are specifically focused on different aspects of trading to provide value to various types of traders in TTG. If you become a member of True Trading Group, you don't just have to trade like me. We have a lot of other moderators, a lot of other traders that are extremely good at what they do, that have fantastic trade statistics, that can explain and can educate, and that are professional traders that maybe you trade more like Chris Toner, maybe you trade more like Alex, or more like Jay Downing, or like the Wolf, and maybe my style is not perfect for you. Maybe you're comfortable with another style or another strategy. That's why it's True Trading Group and it's not michaeledward.com. Okay. Now, I called Chris Toner our due diligence master. Okay. But TTG is a lot more than just about the curriculum and the chat room. It's about resources. It's about a platform that gives you a arm's length reach. Okay, you are just every resource and tool that you could possibly imagine to become a consistent profitable trader is at your fingertips. Okay. We also have many due diligence tools, including access to real-time news from NASDAQ.com. Okay. We just signed a deal with NASDAQ.com to get their MT Pro Newswire feed. Okay. The same news feed that NASDAQ.com uses on their site. We have now signed a deal to implement that in our chat room. So we now have a live news feed that is being pulled from NASDAQ.com, okay, that updates members in our chat room in real time whenever there is a news release that comes out there during the day. We also have a stock profile section. It's a cumulative analyst rating, okay? You guys are interested in any particular stock. You're interested in Tesla, AMD, Roku, Beyond Meat, whatever it is, Uber, Lyft, whatever the stock is you're interested in, you type in that stock in our stock profile section, you get a downloadable PDF report. Okay, you guys get a downloadable PDF report on that particular stock. And we also compile all the analyst ratings. So let's say you have 20 different analysts that cover that particular stock. We show you how many have strong buy, buy, hold, moderate sell, strong sell. We show you how many of those analysts. We compile all that data for you in one specific place. That can help you with all your trading decisions and your investment decisions as well. Okay. And like I said, guys, I told you guys earlier about the trade simulator where you can hone your skills and practice trading and not risk real money. I recommend, okay, hear me now. I suggest you build your win rate up to around 50% or higher before following alerts with real money. Okay. I recommend you use the trade simulator. You can trade with fake money and hone your skills and practice. Implement what you are learning in the courses, practice it on our simulator, and use fake money in the meantime. All of this is free and included with your membership. And I recommend you do that until you maintain about a 50% win rate before you start trading with real money. Use the simulator. It is there for your help. Then you guys have access, and I mean direct access. In chat, you can message me or any one of the other moderators directly. We reply to all of our DMs. We are here to help you. You cannot call yourself a mentor if your mentees do not have access to you. Access is what you guys get. Direct access to your THD moderators and your mentors when it comes to True Trading Group, because in the chat room, you can private message us all day, any day. We are there to help you. Okay. So that's what, people say, oh, they're my mentor, but you guys don't have access to them. You guys have access to me and the rest of the mods at all times. Okay. For example, just this weekend, this Wednesday from 5 to 7 p.m. Eastern, all THD members are getting access to an exclusive workshop where myself and other THD mods are going to show you how to turn a $500 trading account into a $25,000 trading account. A lot of people are always asking me, like, how do you grow a small account? How do you grow a small account? I've only got $500. I've only got $1,000. Okay. Sean Miller, if you're still here, Sean Miller, I use him as my example every single live stream because he's always on the live stream. Sean, if you're still here, show me, brother. Raise your hand. Show me that you're still here if you are here. But Sean Miller, perfect example. TGG member started with $500 in his account. About three and a half months later, he's now up to around $5,000. Started from 500. So we are going to show, we're putting on a workshop this Wednesday from 5 p.m. to 7 p.m. Eastern, okay, where myself and other moderators are going, every THD member, all of our members have access to this workshop, okay? All of our members have access to this workshop where we're going to be covering and discussing how to grow a $500 account into a $25,000 account and get out of the dreaded PDT rule. Everybody hates PDT rule and being stuck under PDT and only being able to make 3-day trades in a 5-day period. One way to get around that is to switch to a cash account. A cash account will not be bound to PDT, but you will only be able to trade with the cash that's in your account, and it takes a trade plus 2 days for that cash to settle before you can use it again. So again, you're still limited in some fashion using a cash account if you have a small account under the $25,000 mark that's required to be out of PDT rule. So I'm going to be hosting an entire workshop, a 2-hour workshop on Wednesday, where I'm going to explain to traders and talk about both mental tips and lessons, but also technical tips and lessons when it comes to actual trading, position sizing, risk management, how to build that account, how to grow the account, how to increase your position size while still maintaining risk, what you should be trading, what you should stay away from when you have a small account. I'm going to be covering all of those key points that I think are crucial for traders that have small accounts that are trying to grow their accounts. So I'm going to be doing that on Wednesday. So that's just one example. Okay, that's just one example of how you guys get access to myself and the TeachD members. Once you guys and TeachD moderators, once you sign up to True Training Group, that's not the end of it. Okay, we are constantly hosting webinars, workshops, private study group sessions, virtual trading seminars. I mean, we are constantly doing things for our members. It does not stop with your membership, and it does not stop with the courses. It does not stop with the trade alerts. It does not stop with the simulator. We also have a stock screener where you guys can filter through stocks during the day to see which stocks are most in focus and which stocks are most active, where you should be focusing your attention. We've got a premium blog. We have a TeachD forum where you guys can keep the conversation going with members and moderators even after we close down the chat. I mean, there is so much that is included in your membership. It's just insane. Okay, I want to give you guys the opportunity to join True Training Group and have access to the mentorship that I had, which completely changed my life. Okay, that is what it comes down to. There's a lot of you that are brand new here to the TeachD stream. Like I said, first time I'm streaming on some various social media platforms, and True Training Group is all about giving the average person the same opportunity that I had to excel by giving you the exact same access to mentorship, quality education, the exact same stuff that I had access to working at a hedge fund on Wall Street. That's what TeachD is all about. Now, look, we do not offer monthly subscriptions or quarterly. We have one subscription, which is an all-inclusive membership and subscription. Why? People may ask, well, why, Mike? Why is it only just one membership? Why can't I pay monthly? Why is it only a one-year membership that's all-inclusive, get everything? Why? Because that's what we are. I want to give you guys access to everything. Okay, I want to give you access to everything. That's what we are. TTG, we're all in. We're a family looking to pick each other up and move towards consistent profitability so you can live the life you always knew that you should. That is why. Because I do not want, if I have more education, more resources, and more tools, and you say, Mike, I'm ready, I want to join the TTG family, why would I not give you access to all of the education, resources, and tools? Why would I only say, oh, Chris, you're ready to join? Great. Here's a piece of what you need to be successful. Why would I do that to you? I'm setting you up to fail. That's like me telling you as maybe a college English professor, say, here, guys, read this book. I'm going to give you, but there's going to be a test on it in 2 weeks. Read this book. And I only give you the first 2 chapters of the book to read, but I quiz you on all 35 chapters of the book. I'm setting you up to fail. Why would I not give you access to the entire book? At TTG, you get access to the entire book. You get access to every single resource and tool and educational piece of content that we have at our disposal, because that is what you need to give you the best possibility and the best chances of reaching your goals and living the life that you guys always knew that you should, and becoming the consistent profitable traders that you guys always dreamed of. That's why we're all in. Okay, we're all in. You guys get access to every single thing once you join our TeachD family. Now, normally, everything that I'm sharing with you guys, normally that would cost you over $2,000 for the year. Okay, again, everything I just said to you is included. Normally, it would cost $2,048, and everything's included. Everything we have to offer, everything we will ever have to offer, it's one price. Think like Netflix. Okay, whenever we come out with a new resource, a new tool, a new educational course, it's included in your membership. So like Netflix, when you guys sign up to Netflix and Netflix comes out with a new documentary next month, they don't ask you for $20 to watch a documentary. It's included in their membership. TTG is the same way. It's one price you pay. You get access to every single thing that we have at our disposal. If I come out with a new course next week, you guys automatically get access to it. If we come out with a new charting tool next month, you guys automatically get access to it. There's no upcharge for anything in True Training. You guys will never be upsold in True Training. Whatever we have at our disposal for our members, you get access to as a member of the TeachD family. So right now, I'm going to offer anyone that has the backbone, the willingness, the determination to invest in themselves, to do so and sign up tonight. If you guys do so, if you are ready to invest in yourselves and you guys sign up tonight, you are going to save 35% off for the year and only pay $1,287. So I just told you everything that I just explained to you normally costs $2,048. But for those of you that are ready to sign up tonight, you're going to get the chance to do so at a 37% discount for $1,287. It may sound like a lot up front, right? Wrong. It's nothing. How many of you buy a stock only to take a loss without even thinking about it? Now you might say, oh, Mike, well, $1,287. I know that's 37% off, but that still sounds like a lot of money. It's still a lot of money, Mike. How many of you are willing to, you're willing tomorrow, how many of you are going to go, you're going to buy a stock, you have no idea what you're doing, and you're going to take a loss on it, and you don't even, you're like, oh yeah, you're used to it because you've been losing for the last several months already. And you wouldn't even think about it. How many of you would do that? How many of you would just take a loss on a trade without even thinking about it? Many of you. Consider this, and this is a real statistic that we have surveyed members of our TeachD family in chat. This is a statistic of our TeachD members. 80% of TTG members make back 7 to 10 times the membership fee in their first few months of trading with TTG. 80% of our members make 7 to times their membership fee back in just the first few months of TTG, of trading with TTG. That is a statistic that we have gotten from surveying our TTG members in chat multiple times. That's the numbers. Those are the stats. Now, are 100% of our members succeeding? No. Are 20% of them still struggling? Yes. And are we working with those 20%? Yes, we are. We even have a red to green class. Okay, we even have a red to green class workshop that we host where any members that have completed the courses and are still struggling, you guys can join this workshop, okay, and this class to help you guys get yourselves back on track and going in the right direction because we leave no trader behind. But this is a statistic where 80% of traders make back, of our TTG members make back 7 to 10 times their membership fee within just the first few months of their membership. 25% of that 80% make it back within the first 30 days. 80% do so within the first 6 months. 25% of that 80 make it back in the first 30 days. Guys, this is a real statistic of a survey we've done with all of our TeachD members. To help ensure that you guys get that full 80%, I'm going to give everyone that signs up tonight a free one-on-one trading mentor session with myself and or any of the TeachD Pro moderators that I talked about earlier on the stream. I explained to you what their focuses are. Okay, so I talked to you guys about the TeachD moderators and what their niches are and what their focuses are. Anyone that signs up tonight to ensure that you have the greatest chance of being part of that 80%, you get that full 80%. Anyone that signs up by midnight tonight is going to get included a one-on-one mentor session with myself or any one of the other moderators that I just mentioned whose focus you think would fit what you're looking for. I suggest you give it about a week after signing up to see who you relate to the best. All right, so if you guys do sign up to TTG, give it a week or two, get familiar with the moderators, see which moderator you like best, and then decide, okay, this is the trader that I want to do my one-on-one with. Also, there's more. Also, those of you that sign up tonight will get a guaranteed spot in Wednesday's workshop on how to turn a $500 trading account into a $25,000 trading account. Okay, so my workshop on Wednesday, how to grow a small account, how to turn a $500 account into a $25,000 account. My workshop on Wednesday from 5 to 7 p.m. Eastern. Anyone that signs up tonight gets a guaranteed spot in that workshop. So those of you that sign up tonight are getting a 37% discount. You're getting a one-on-one mentor session with any one of the pro moderators that you choose. You're also getting a guaranteed spot in my workshop on how to grow a $500 account into a $25,000 account. Okay. Now listen, some of you that that are out there that may have been burned by another group before. I know there's a lot of BS out there. There's a lot of BS out there. There's a lot of people that are trying to take advantage of your desire to learn how to trade stocks. I know there's a lot of bullshit out there, and I'm sorry that this has happened to you. This industry is not always one that's designed to help you all for real. Okay, we're different. Ask the members that are here if we are different. all of my TeachD members that are here right now, comment in chat and you let our guests know, people that are on the fence, that are contemplating joining our family, let them know what it's like to be part of the TeachD family and the part of the TeachD community. Let them know about the education and mentorship that you receive. Let them know about how we truly care about one another and help one another succeed. That is from my TeachD members. Comment in chat right now. Again, for those of you that are confused, consider this. Again, 80% of TeachD members will make back 7 to 10 times their yearly membership within the first 6 months of their membership. Of that, 25% will make it back within the first 25 days. 7 to 10 times. If I said to you, are you willing to invest $1,287 in yourself to get a professional education, knowing that you had an 80% chance of making up to 10 times that within just 6 months, would you do it? That's what it comes down to. Ask yourself that question. Would you do it? If you would, if you are willing to take $1,287, invest it in yourself, get a professional education, and have an 80% chance to make up to 10 times that money within 6 months, if you're willing to do it, click the link in chat or in the description below and use the coupon code TTG820 to get that $1,287 price. Get that free one-on-one and get access to the workshop on Wednesday, and let's do this. You guys deserve to be consistently profitable, to stand on your own 2 feet, to tell anyone that holds a dollar over your head to get lost. You guys are here at 10:30 at night on a Sunday night. Instead of spending time with your family or your friends, you're on this live stream with me because you desperately want to become the best trader you possibly can. You are determined to make this work. You are determined. Maybe you have to make this work based on your situations. Maybe you just want to make this work. This is a goal. This is a dream of yours. You would not be here with me on this live stream if you were not motivated and goal driven to succeed at this. If you are ready to succeed at this and you are ready to get a professional education, have an 80% chance of making 10 times that money back in 6 months, get a one-on-one with a professional trader, join me on that workshop on Wednesday, how to grow a small account. If you guys are ready for that, use that coupon code TTG820. Click that link in chat. You deserve it. If you are putting the work in right now at 10:30 on a Sunday night, you deserve it. Arm yourself, equip yourself with the education, resources, and tools to give yourself the best possibility, to give yourself the best chances when you step into that arena tomorrow morning once that bell rings. Because that's what you're doing. You're stepping into the arena. And you're stepping into the arena with traders that are far better than you, that are far faster than you, smarter than you, that have more money than you and more experience than you. When you place a trade, there's another trader at the other end of that trade. You're trading against people like me, against people that work at hedge funds, against the trader at Goldman Sachs, against the trader with a $5 million account. You're trading against them. So you need to make sure that you have the best resources and tools and ammunition to go to war. And I promise to equip you with the ammunition, resources, and tools and education that you need to go to war and to come out victorious. And when you do come out victorious, we're going to come out as a group and as a family because we stand by each other, we grow together, we learn together, we trade together, and we profit together. That is what TTG is all about. That's what being part of the TTG family is all about. Guys, again, our pro traders in chat, our TTG pro traders, our moderators, have a cumulative win rate of 79.94% in the past 30 days. That is a cumulative win rate of about 80% in just the last 30 days. All right. So that's it, guys. That's what it's all about. That's what it comes down to. So again, you have to ask yourself, are you willing to invest $1,287 in yourself to get a professional education? The same education I received working at a hedge fund. The same education that allowed me to win Trader of the Year award. The same education I teach all my THD family members to know that you have an 80% chance to make back 7 to 10 times that money within the first 6 months of your trading. Are you willing to do that? Are you willing to invest $1,287 in yourself with an 80% chance to make up to 10 times that in the first 6 months? Get a one-on-one with a professional pro trader. Get access to my How to Grow a Small Account workshop on Wednesday. That is what you guys get for signing up tonight by using the coupon code TTG820. Get that 37% discount. Get that one-on-one. Get access to that workshop and get the professional education that you deserve. All right. Again, guys, I'm going to continue to drill this into your head because when you think about the math, it's insane. Let's go over this again. Okay. 80% of TTG members make 7 to 10 times their membership fee back in the first 6 months. That is between $9,000 and $13,000. That's what that works out to. 7 to 10 times the membership fee is between $9,000 and $13,000. If I said to you, are you willing to take $1,287 right now? If you had are you willing to invest that in yourself? If you knew you had an 80% chance to make between $9,000 and $13,000 over the next 6 months, are you willing to do that? Those are the statistics. Our pro traders right now are sporting a cumulative 80% win rate over the last 30 days. TTG members, 80% of them are making between $9,000 and $13,000 within that first 6-month period. That's 7 to 10 times your membership fee. Are you willing to do that? Use the coupon code TTG820 and stop playing games. Get serious, get real, get educated, get profitable. That's it, guys. That concludes our live stream here tonight. I want to thank all of our new faces that joined us here tonight on this stream. It was a blast having you. I hope you guys learned something on this stream. We talked about a lot of different things today. We talked about how to build your watch list, how to organize your watch list, how to develop a game plan, how to identify A setups from B or C setups. We talked about how to increase your position size. We talked about a lot of things here on this live stream tonight. So I hope you guys learned something. If you have not done so already, make sure you guys hit that like button for me. Make sure that you guys share this stream on your Twitter and or Facebook. Let's grow this channel as much as we can so we can educate as many traders as we can. It was a blast. I'm happy to be back. I'm feeling better. I can't wait to be in chat tomorrow with my TTG family, and let's navigate the markets and figure out how we're going to make some money tomorrow. Use coupon code TTG820. Get that 37% discount. Get that one-on-one and get access to my workshop on Wednesday. It was a blast on this live stream. Thank you guys for joining me. Until next time, later, guys. I'll see you all in chat. Take care.